Welcome to the Transparent FX Academy. I'm Nick and I'm a top author on TradingView with over 190k reputation points. In this video, I'll speak about EURUSD. And as usual, to keep the video as educational as possible, first I'll cover the technical aspect for this market. Then we will be moving to the order flow by looking at the commitment of traders, so the COT data, which is essentially what the big players in the market are doing and how they're moving and shifting their orders, which is what you see right here. By the end of the video, by using a combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here for this pair. So this is definitely a video you do not want to miss. So without further ado, let's jump straight into it. Starting here from the monthly time frame, what we can see is that we have a market which at the moment is rejecting to the upside a quite strong historical monthly structured zone. In fact, what we can notice is that this level was acting as previous resistance for a few years. Every time the market tested its zone, it got rejected to the downside, showing how institutions were protecting this level as a resistance zone and selling into it every time the market was approaching this level. And we will be speaking about institutional positioning in just a few moments when we move to the commitment of traders analysis. But for now, let's continue to focus on the technicals. So here in the monthly, we had this very strong historical level of resistance. Right now, we just had the breakout above the zone. And what we know is that a previous level of resistance, once it is broken to the upside, in this case from a monthly closing perspective, so when the market closes on the time frame above a structured zone, that previous resistance is supposed to be turned support. And the market is supposed to go and retest the level and reject it to the upside. That is how most of the times the market moves. And that is exactly what the market also did right here. We had the break, the market then went and retested the level. At the moment, it is rejecting the zone to the upside. So more bullish price action could be expected away from this zone, fueled by institutional longing, which we will speak about in just a few moments. Dropping down on the weekly time frame, what do we see? Now here in the weekly, the price action is very interesting and very clear as well. We can notice a perfect inversion of trend. We went from the creation of weekly lower lows and lower highs, which is the textbook definition of a downtrend. Then we had the creation of this double bottom exactly at this zone. Now the market has inverted to the creation of weekly higher highs and higher lows. Now the last move was the creation here of a higher low. The next logical step would be for the market to create a new weekly higher high. So also here in the weekly, everything looks very bullish. We can also notice how we had a strong impulse followed by a correction. If we want to measure a correction after an impulse, we have to take our Fibonacci from the low to the high of the impulse leg. This shows us how the zone that the market just rejected is the area in between the 50% and 0.618, which is a strong confluence of support zone because it was also in confluence with this previous supply and resistance, now turned support and demand. And when we have multiple layers of support in the same area of price as we have right here, so a confluence of support zone, there is an increased probability of seeing institutional longing. Speaking about institutional longing, and before we go down on the lower time frames, let's move to the commitment of traders and see what we have on the EURUSD. Now, why do I say EURUSD if we're only looking at the euro? Well, because all currencies on the spot, they're traded against the USD. So if we are looking at the data for the euro, we're actually already looking at EURUSD. And what we can see here is that in the long term, net positions have massively been increased. We went from institutions having minus 64.4k net positions, so way more shorts than longs, 230k shorts compared to only 165k longs, all the way up to now having a massive 74.5k net position. So complete opposite, meaning that we went from having more shorts than longs to now having more longs than shorts, with 206k longs compared to only 131k shorts from an institutional perspective on EURUSD. So clearly institutions are now moving to the bullish side of EURUSD and are already positioned to the bullish side of it. So let's keep all of this in mind and move back to the chart. And by the way, if you still haven't, make sure that you join my free Telegram channel, which you'll find linked in the description so you never miss new updates. Now back to the analysis. Now dropping down on the daily time frame, what do we see? Well, here on the daily, we can notice how we do have important structure at this level. Why do we have important structure? Well, first of all, I did speak about EURUSD just a few days ago when the market was around this area, and I explained all the reasons for which from here I was expecting this rejection to the upside, which is in fact exactly what the market just gave us. And by the way, I will link in the description also that previous analysis, so you can go and check it out for more free education. But at the moment, what do we have? Well, here on the daily, as I was saying, we have important structure. This level here, if we check it and we see how the market was reacting to the zone, we can see how it was acting as previous support here. Then the market broke it to the downside, started acting as resistance. Then the market broke it to the upside, started acting as support. And at the moment, it is still acting as support and the market is rejecting it to the upside. So essentially what we're seeing here is the creation of an uptrend from a daily perspective. We had the first high, higher low, higher high, higher low. The next logical step would be a new potential daily higher high. So in a situation like this, I would expect more institutional buying, considering that institutions are already buying. So in a situation like this, what would I expect? Well, as usual, trading is reactive and not predictive. The monthly, weekly, and daily timeframes combined with the COT data, those are the best timeframes when it comes to the directional aspect of the market. And as my students know very well, the best timeframes when it comes to identifying early shifts in the trend of a market, the best timeframes for that are the intraday timeframes, so 4 hour and lower. Therefore, what I would expect is that if this market would shift from an intraday bearish to a bullish market, I wouldn't be surprised to see a potential rejection to the upside away from this level. That definitely wouldn't surprise me. All this free education and analysis that you see me share on YouTube is actually just the tip of the iceberg. If you want to learn more, I really suggest that you head over to the website linked in the description and you will be brought to my website. Here, I really put together the best trading program on the planet. You can gain access to all my courses from the really basics of charting to the more advanced topics like building portfolios of automated strategies using the MQL programming languages, building portfolios of strategies, and much, much more. You have the possibility to gain access to the Trading Station software with the Telegram notification integrations, one-on-one mentoring directly with me, the COT data software, which often you see me use in my free analysis. And this is our all-in-one program, so you gain access to everything immediately. You gain access to all my EAs, so essentially you have access to my strategies, which you can then personalize to your own preferences. You gain access to the trading show, and here you basically can see the presentation of each and every one of my EAs, so each and every one of my strategies which you will have access to. You gain access to the trading show, which is essentially a live stream of all trades as they're happening on my account, so opened, closed, managed, everything in real time. And if you continue to scroll down past the testimonials, you will see that you have the possibility to join and gain automatically access with the email and password that you will create during the sign-up process. So I really suggest that you go and check it out. The link is in the description, and I will see you in it. If you enjoyed the video, make sure that you leave a like. Also, let me know in the comments below any new pairs that you would like me to cover in my next videos. Subscribe to the channel so you never miss new updates, and I will see you in my next video.